Hey, Danny Reardon here, and in today's video, we're going to be talking about liquidity. We're going to be talking about what it is, why liquidity matters, and the psychology behind it. So let's jump into the computer and start running through it. So when we are talking about smart money trading, liquidity pools are identifying basically intersections of orders. And these are ranges where you will find a lot of long and short, take profit and stop loss orders. And price will usually swing back and forth in these areas. And we can identify these pools at extended consolidation ranges where traders will form lots of opinions and open positions on both sides, like I've shown you in many other videos, expecting a breakout with their sell stops and buy stops. We also have obvious swing points or highs and lows, as well as collections of highs and lows, also referred to equal highs or equal lows, which you've probably heard me say many times before. And also, liquidity is found on either side of the Asian range, and that's more of a time and price. In the grand scheme of things, these stops end up becoming useful liquidity pools for just larger players with the firepower to influence the future market direction. And this can be a big step ahead for many traders who don't know why they're losing in the first place. So let's run through examples here. And you've probably heard me talk about the clean side and the dirty side. Now, the clean side is support and resistance, and we can see that up here. And when I see the clean side, it's something I want to stay away from because clean side is something that's easy to read. It's especially for the inexperienced trader or the trader that is looking for resistance levels or support levels. And I'm more so focused on the dirty side, which would be like this, where there's no rhyme or reason to it. You can see, some lows here, another low before it swoops up. It almost doesn't make sense. And we can see that's typically where we're seeing manipulation, like here, a strong push down before a move up, equal lows here before price takes it and then pushes up, right? Another cluster of lows here before a push down into it and then push up. So that's very hard for a lot of traders to read. It's hard to find support resistance levels. It's hard to put trend lines on it. And the clean side, like we're seeing here, it's very easy just to draw a line straight across and then start looking for opportunities and start selling. So retail traders don't usually have to think about liquidity since the market can easily absorb orders up to tens or hundreds of millions of dollars, far above the size that they've ever traded, even with high leverage. And traders who do trade above this size cannot think about the markets like common retail traders. They need liquidity in order to fill their positions. And they also need to have a clear idea of where to get out and exit their positions. Smart money cannot simply accumulate or distribute a large position whenever and wherever they wish. So instead, they have to look for these places in the market where liquidity is accumulating, and stops are helping them in an indirect way. So if we're looking at this example, if we're using this as a resistance level and engage in short orders, we would place stop losses above this zone here. When price reaches the level where we've placed our stop losses, our account trigger in a reverse market order to close our losing position. Now, this is to say that if I'm long, my stop loss will be a sell order, and if I'm short, my stop loss would be a buy order. So hence in this example, if we're selling this resistance level, I'm being forced to buy because my account is going to do it automatically at that level. So imagine hundreds of stop losses or thousands of stop losses being hit in a quick run. Whenever stop loss order cluster, there is a two-way pool of liquidity that is being created. The traders get stopped out, are forced to issue an opposite side order that gives large traders the possibility to fade the stops that accumulate at those levels. So here's our next chart, and I want to take a look at this example, and I want you to keep in mind The market is always going to run where it will hurt the most people. You've heard me say this many times before. And this can be a very easy way of identifying liquidity that will come in the form of support and resistance and trend lines, double tops and double bottoms, generating swing highs and swing lows and other retail patterns. So in this pattern here, this example, we can see a couple obvious resistance levels and support levels. So here we have resistance, price breaks through, now price finds support. Here we have support, resistance, and now support again. And then we can see over here another touch. So we can see this would be acting as a support. Price breaks through this level here. Now it's acting like resistance. And then we can see price comes back up, test it again. So just based on this information here, we can have a really good idea of where retail traders are putting stops and looking for opportunities, right? Here's a double bottom. That's viewed as a reversal pattern in buying, right? Stop losses would be accumulating here. This break retest level, if price breaks through this level and then they're looking for buying on this new support, stop losses would go somewhere under these lows here, or perhaps this low, or even a wider stop under this low here, right? Here is a potential double top for maybe the trader that believes this is going to come down, right? Strong bearish engulfing candle as well. Where would retail traders put their stops? Above an obvious high like here. If retail traders are looking for selling off of this, where would orders be accumulating? Right here. Same thing, we have another obvious low here. If this break retest level here, if somebody were to be buying this level, an obvious stop loss would be here. Here is what happened with that example, and we can see that pool of liquidity that was building on the most recent price action on that break retest level. We can see what really took place here. We can see price pushed up higher into this level, attacking stop losses that might have been accumulating here, triggering buy stops as well, right? If anybody's putting a buy stop on this level here, where are they putting their stop loss? Maybe under these lows here, maybe a wider stop loss and putting it under this low here. So that is triggering buy stops. That's now looking for, now we have another level here, a disrespected resistance level that would bring in break retest level, break retest traders on a newfound support, stop losses also under lows. And we can see as soon as price pushes up into this area here, it quickly reverses, strong bearish engulfing candle and attacking these lows, ultimately finding its way down all the way and attacking this low here. So this is also providing a manipulation candle, which we would then be able to build a high quality trade setup with. So now if you ever saw my previous video on market structure, we can see the structure points that we want to build our setups on are the ones that create or show manipulation on levels like this. So nice little double top here, break retest, strong push up, create a lower low. This here would be the swing, the trading range, the swing points that we would want to focus on to build our setup. Here would be our entry point here. We would throw our fibs, swing high to swing low, find our kill zone, and we have our nice candle here. That would be our entry there that we would build our setup on. Stop loss, obviously above this manipulation candle here. So now we can take a look at that setup and how price respected this new swing and that new manipulation candle. So after this low was run on, we have our new lower low established, a little double bottom here. This would be a perfect spot to target. Now price is rebalancing that expansion, coming back up, creating this short-term high, a little bit of a pullback. Price aggressively pushes up, runs on this high, but respects our manipulation candle. Our stop loss would be safe above the high here. Then we can see it's starting to break down, nice little test, and then aggressively attacks the low, and ultimately this low here, and creating a new lower low. So when most people enter the Forex space, 9.5 times out of 10, when they start researching, they're going to either stumble across or get introduced to popular retail patterns and practices like what you're seeing here in front of you. Remember, 90 to 95% of retail traders fail and lose money consistently. So again, you can see if you saw my structure video or my time and price video, you can see a lot of it is the same thing. Trend lines, looking for multiple touches, that's buying, right? Resistance, price breaks through, now that's our new support. Breaks through, resistance, new support. So it's a lot of the same thing, just looking for support, resistance, and trend lines. And we can see there's just multiple examples on this Google search of these Forex patterns, and it's just all the same stuff. Teaching traders patterns and concepts that design trading opportunities which generate large pools of liquidity, putting them on the wrong side of the market. And they're just failing to recognize what's accumulating around these support, resistance, double tops, double bottoms, and all these different patterns. And that is liquidity. So here are some more popular Forex patterns shown through a simple Google search. And all these patterns and trend lines and support and resistance are teaching traders to look for opportunities in the worst possible places with no idea that it's part of a trap and not the true narrative at play. And as you've heard me say many other times before, smart money doesn't subscribe to these squiggly lines or trend lines or patterns being shown here. So why should you? Why would you ever use them? Observe the masses and do the opposite. So I hope that you were able to get value from this video. If you did or have any questions, make sure to comment below and like and subscribe to the channel.